Hello, welcome to CoordinateFX. I am Esua. I've been trading over 3 years now. In this video, I'll be going through the different types of market structure. There are 3 types of market structures: the bullish market structure and the bearish market structure. I have written down the various names which a specific structure can be called. You can either call it an upward market structure, bullish market structure, or uptrend or bullish trend. And you can call the consolidating market as a ranging market structure or consolidating market structure. For the downward market structure, you can call it downward market structure, bearish market structure, or bearish trend. These are the different names which you can call a market structure. I'll be drawing the market structure using a line chart to explain why each of these market structure is being called this way. For the upward market structure, we have market moving in this way. If you look at this market, these lines I've just drawn, you will notice that price is generally moving towards the upward side. So we can all agree that price here is moving towards the upward direction. We have to label this market movement. We label it as, this will be the low. We'll put an L, this will be the low. This right up here will be the high. Then this up here will be the higher high, HH. We'll use the abbreviation HH, which is higher high. The reason why we're calling this higher high is because this high here is higher than this high here is higher than the high here. Then we call this point down here a higher low, because this low point here is higher than this low here. So we'll mark all this faster. Yeah. In an upward trend or a bullish market structure, price moves towards the upward direction, forming higher highs and higher lows. That is what an upward market trend looks like. For a consolidating market trend, this is when the market is indecisive. Like the market is not actually moving upward, neither is it moving downward. It's just moving sideways. That is ranging, is flowing between a range. That's what we call a ranging market structure. Now, for a ranging market structure, market moves like this. You don't really know exactly where the market is going. It moves in a sideways manner. Now, market moves within a specific price range like this. That's a ranging market structure. This is an example of a ranging market structure. So all we have here are highs and lows. They are almost equivalent to each other. Now this is a consolidating market structure. For the bearish market structure, price is actually moving towards a downward direction. Now, if we have to illustrate this using a line chart, we have a high, a low, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low. To mark the points on a downward trend, this point here will be the high, H, letter H, then this point will be the low, and this point here will be the lower high, and this point here will be the lower low. So I will label all these points. So in a downward trend, price is generally moving towards the downward direction in this manner. Price is moving towards the downward direction. in a downward trend, we can say that price is forming lower highs and lower lows. So you have a high, low, lower high, lower low, lower high, lower low, lower high, lower low. The reason why we're calling this a lower high is because this high point up here is lower than this high up here. So this is a lower high. And the reason why we're calling this a lower low is because this point is a low, but it is lower than this other low point here. So this is a lower low. Now, these are the three different market structures in the simplest form that it can be drawn. If you find this video helpful, be kind enough to hit that subscribe button. Also, check out the description for my exclusive link to the channel where I share all the trades I take. Thank you. See you on the next video.